Hey, what's up, guys? Welcome to the third episode of the Life Insurance Podcast. My name's John David, and this is Mo. If you don't know, we run a insurance agency called Arise Insurance Group, where we focus on telesales, and we get agents up and running to be on track for $250,000 in their first year within their first 90 days or so. So today we're really just going to break down the sales process. I think that this is one of the biggest things that people ask us about for the most part. So just breaking down a $50,000 producer sales process, what he's trying to do, what we look for in the process, and kind of break it down section by section. So, obviously, just setting pace with it, right? The most important thing about this business is activity, right? There's no sales process or sales skill level that's going to outperform your lack of activity or your shitty work ethic. But once you do maximize that activity and work ethic, if you can start incrementally increasing your sales skill and solidifying your sales process, it's very helpful. So, we'll kind of break it down into 5 different parts. So first, just kind of kicking it off with the intro. Before we hop into it, Mode, is there anything maybe mindset behind the process or anything like that you want to break down?
So first of what you said is absolutely correct in terms of you need to get the reps in. A lot of people focus on studying the script for forever without ever actually going through it with a person. You'll make the biggest improvements while talking to prospects, rather than, a role play can only simulate so much. And then the more you talk to people, the more you go through the process, the more you get objections, the more you'll be able to handle those. So activity is definitely number one, and then work your skill set up after that. However, it is of course nice at some point, once you got all the objections out of the way, you've heard it all once, it's not like a new thing anymore, to be able to handle objections, ideally prevent those objections, and that way just improving your close rate. If you start at like 10-15% is probably average, and then if you get your way up to let's call 40-50%, something like that, you're on a good track there.
Perfect. Yeah. So kicking it off, right, obviously the intro, I would argue that this is the most important part of the process. So not only is it the first part, but this is what's going to open up how many presentations you can give. If you can't keep people on the phone past the intro, it doesn't matter how good you are at objection handling, closing, pitching, product knowledge, anything like that. So the most important part, and something that we push on very heavily for new agents, is solidifying how good you are at not only the intro, but also the intro objection. So we'll kind of talk about that process there. I think the biggest thing about intros is 2 parts. 1, you have to show people you're different. And 2, you have to understand that most people do not want to be on the phone with you. Just because they filled out the form does not mean they want to talk to you, right? And so a bigger thing that I talk about a lot is people want insurance, but they don't want to buy insurance, right? They have to get sold insurance. We were actually just talking about this, last night. But so as far as the intro goes, what is kind of your mentality behind it? What are you looking for? How are you showing people you're different on the front end?
I think a big thing for me personally is just that I try to roll with the punches, as in, your dialer, your connections, whatever it is, there's always going to be some type of delay, lag. There's always going to be some type of issue. People can't hear you, so no matter how perfect your intro is, you just have to be able to improvise to some extent. And the very easiest thing to do is just to put a little chuckle in, the connection's not there, put a little bit of a laugh in, and be like, hey, sorry for that, and then, go right back in. Because usually when people hear someone else laughing, it lowers their guard, at least to a certain extent, not 100%, but at least to a certain extent. And that first impression that people get in that first, I think it's 7 to 12 seconds, usually the delay on a connection will kill about, I'm going to say 2 to 5 seconds. So that once they hear you, they gotta be okay with talking to you right away, and really a chuckle, laugh really helps quite a bit. Or just catching them off guard with some type of pattern interrupt. But laughing is the easiest because it's almost applicable to any situation, right? Even if they yell at you, you can laugh, and they're like, "Why is the guy laughing?" Right?
Yeah.
Like no matter what they answer, laughing usually works pretty well. And then going into your first sentence there, "Hey, this is just Mo. Just had a chance to get back to you about the form you filled out on Facebook, Google, wherever you get the form. Looks like you were looking at XYZ." And then I like to branch it off into a either or question. So I get to answer something, or I get them to answer something, because then they engage with me, and it's a lot easier to get them in a conversation. And the either or is just their reflex is going to be to give an option, open-ended question in the intro is not necessarily my preferred way to go. Not any different approach there for you. Are you ready to launch your life insurance career or finally break through, but the lead cost is holding you back?
We solve that. With us, you get free leads for your first 8 weeks to build your pipeline fast, plus full commissions, and you own your book of business from day one.
Look, we have noticed the biggest reason agents fail isn't because they suck. It's because they don't get enough reps in front of enough people fast enough due to not being able to afford the right amount of leads.
That's why we're footing the bill to get you the volume of leads you need to build a multi-six-figure income in this industry without stealing any of your comps.
If you're interested in applying, click the link below. Spots are limited. Don't wait.
Yeah, I mean, just a couple things on it. For me, it's like, and so just seeing the biggest mistakes for new agents when they're coming into a phone call. The first thing is, one, having your expectations ready, right? Like I'm here to help people. They filled out a form. I'm getting back to them about the form. So a lot of the mistakes I see is, "Hey, Mo, my name's Frank. I'm getting back to you about the life insurance plans. I'm getting back to you about this." Whatever it is, it's like, "No, I'm getting back to you about the form you filled out about this." So just announcing that it's about the form that they filled out, because if I'm getting back to you about life insurance plans in Texas or California or wherever I am, I may be cold calling, I may be something like that. But going in, a couple of mistakes that I see is, one, they're telling people they're getting back to them about life insurance, about Medicare, about health insurance, about whatever it is. No. I'm getting back to you about the form you filled out and you asked me to call you back. That's number one. And then number two, I don't want to brush this off. I want to make sure we kind of point this out, is most people call in a question form of, "Hey, Mo," like you're asking if that's Mo. We see this happen a lot, and it's really more of a downtone of like a statement of, "Hey, Mo," right? So the reason being is because you filled out a form, you put this phone number on here. I assume this is your phone number. So when I'm calling you, I'm not asking if this is Mo. I'm not asking, is this Frank? Is this John? Is this whoever it is? I'm assuming this is John, right? If I were to call Mo up and I already have his number, I know who he is, I wouldn't call him and he say hello and I say, "Hey, is this Mo?" I'm going to say, "Hey, Mo, man, this, and this," right? Same thing. So make sure when you're coming into the intro of the call, you're expecting that person to be on the other line, not asking if they're there. And then make sure you explain to them that you're getting back to them about the form they filled out, not necessarily the product that they're interested in, if that makes sense, right? Do you have any?
Yeah, I mean the form you filled out in regards to the
Correct.
life insurance options, whatever the idea is, you want to tell them, of course, what it's about.
Yes.
Nevertheless, like you said, you want to make sure that they know you're getting back to them. So it's not a cold call, right? Now, is that always going to work? No, they always, some people still think fill out 50 forms, nobody should call them.
Yeah.
But nevertheless, yeah, that's kind of the way in there. And then just kind of ideally being detached from the conversation to a certain degree.
Yeah.
Because the less needy you sound, the more likely it is that they're like engaging in the conversation. If you're like clawing for that sale and you have that sales breath, how some people say it, it's just not going to land very well, right?
Yeah.
And then you go a couple of questions in and then go into the fact, by the way, this is all final expense geared, right? So just so we're on the same page there, final expense, general life, mortgage protection, anything you can close in a single sit, essentially.
Yeah, it's a one call close aspect of it, right? So, and then just a couple touch points on the intro, right? We want to make sure that we get in, we confirm it's them, we confirm whatever little tidbits of information you have, and then like Mo said, an either or answer. And then before you transition into your fact finding, your start asking questions about, I think a good transitionary question is something along the lines of, hey, were you looking for anything specific or just trying to look over all your options? So you could go that route, or were you looking for just yourself or for someone else as well, right? So making sure that you can figure out what they're looking for so y'all can get on the same page. We won't brush too hard on intro objections today. We'll probably do a video about objections in general and go over that. But there's a couple things to note on the intro objections. Is one, I like to tell all my guys, right? Like, there's no intro objection other they just don't want to be on the phone with you. So whether they're busy, they already got it taken care of, they're no longer interested, whatever, they just don't want to talk to you, right? And so as long as you understand that, it's like you can have your word tracks to transition into that. And, most people are going to say they're quote unquote busy. And as I always say, if you book an appointment and they don't show, it wasn't an appointment, it was an objection. So make sure you understand the difference between someone being busy and actually needing to get you off the phone. So once again, I don't want to go too far into the objection side of things because we could be here for 5 hours if we break down every section into objections. But really your intro, a couple strong points of just laughing on the front, just some sort of pattern interrupt. I know when I would dial and there was weather or there's connection issues, you just kind of chuckle it off, and they're not expecting that, so they give you that extra second for you to get in. And I always tell people, right, it's like your first 3 seconds is to buy your next 5, and your next 5 seconds is to buy your next 30, and then your 30 seconds to a minute is to buy you the rest of the presentation. So all you're trying to do is hit these little milestones along the way until you get into your fact finder. So it's like if you can get people to the fact finding process where you're asking health and finances, you should be able to present them as long as they're qualified. Would you agree with that? From fact finder to presentation is going to be pretty high statistically.
Yeah, from fact finder to present. If you lose them in the fact finder, it'll usually come down to that they think that they think they can't qualify, which is usually a cue that you gave.
Yeah.
Oh man, that's quite a bit, or a lot of medications, or whatever that may be. Or that you kind of like break the rapport at some point. There's plenty of things that you can do to break rapport. Biggest thing for most agents is just they don't listen, right? It's like, hey, I want to leave, the intro they'll tell you, hey, I want to leave money for my kids, and then down the road you ask, well, are you going to leave the money to your wife?
Yeah.
Stupid shit like that, right? Yeah, no, seriously, it's like, just listen to the people, make a note, like have a piece of paper and just say, hey, kids, whatever, right? And touch on that again.
If you don't have a fact finder or some sort of piece of paper that you're actually taking notes on, or a tablet or something where you can clearly note down anything that they say, like, you're doing yourself a disservice, because we got 50 million things going on up here. So if you can't write it down, you ain't going to remember. So for sure. For sure.
One thing I will touch on for ease of use, I started going towards the for yourself or someone else as well route. Mm-hmm. If you're very, 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 very good at just want to look at some specific or just all the options, a lot of people will go towards that. I just want the lowest price option. Now you have them in price-based thinking again, and I'm trying to keep them away from that. I'm not saying you can't do it. I'm just saying it's harder to do. And I personally just have seen, keep it stupid simple. With that version of for yourself, someone else as well. Not just because, you might get a second policy out of it if you're lucky, but also because I want to just make sure I'm getting away from the price right away.
Definitely.
I think that's the approach that I take. Both work, but
yeah. And then so when going into the fact finder process, what are you kind of looking for? How are you? Obviously having a blueprint, finding all the health, and this is where we find a lot of the problems come up, especially with people we talk to on the phone. They were sold something improperly. So maybe going through the fact finder, like, I guess a couple questions, twofold, right? Like, what's your process in the sense of like, don't go through the whole fact finder, but what are the key things you're doing, and then on top of that, how do you make sure, as you said, you don't lose the rapport while getting all these basic, boring stuff, right, on the health side?
So there's a couple of things to that. So first off, my transition from, and everybody does that differently. Some people like to explain the process a little bit before going in the fact finder.
Yeah.
My intro to fact finder, like usually I'm in the fact finder within 60 to 80 seconds max. So I get in there really quick. No, it's not that I don't think I lose rapport much there, because a lot of people are like, hey, I just I want to get this through with. So I'm like, cool, let's go, right? Some people, especially newer agents, they might want to explain that first, but always before going to the fact finder, always end on the note on it's pretty basic, it's pretty simple, it's pretty easy, something like that. So you kind of lower their guard. Okay, we're going to go over something, but it's not going to be bad. And then start with the basics, like, hey, just to kind of go over the basics first. Am I using any tobacco or nicotine products? Yes, no. And then go over height, weight, because that's fairly easy. Everybody should know that. If not, they usually have a scale at home, hopefully. Well, they have a general idea, right? That's nothing that they'll be like, oh, damn, I don't know. And then go over the major things. Hey, any heart attacks, strokes, cancers, now in the past, or currently or in the past. And then if you get an answer there, you'll want to ask more into that. And then I go through all the health things. I go into anything minor, blood pressure, cholesterol, diabetes. The reason I say minor and diabetes, even though they can be major, is because I don't want them to feel like they might be disqualified. Then mobility issues, wheelchair, they need any assistance with activities of daily living. From there, go into breathing related respiratory issues, COPD, asthma, sleep apnea. If one of those, are they using oxygen? Like oxygen as in like a external oxygen source, not are they breathing? And then any type of mental issues, bipolar, anxiety, depression, PTSD. Then I ask about hospital stays and then go on the meds, right? I mean, it's super quick to do.
Yeah.
As long as you don't let them wander off too far. And the reason I do it this way first, I want them to tell me their health issues first, and then I go over the medications. And medications then might, tell me other health issues. Like if they have diabetes and take 4 different diabetes medications and gabapentin or pregabalin, chances are they probably have diabetic neuropathy, and I'll ask into that. Now, where you said, well, they might have been sold something improperly, that's where you find those things out. Ideally, using some type of tool that will tell you whether carrier accepts or doesn't accept that, and if you put something in and see that carrier gets excluded, I'm like, maybe we got to look at that. Now, you want to bring it up later, not right there. You got to be really good about what you're talking to bring it up there, right? And then how do you keep people on while going through the health part is it helps tremendously if you know what you're doing.
Yeah.
The major, no as in like know the medications, know the issues, right? Simple reason is most people don't know how to pronounce their medications, and they feel stupid doing that, and you never want to make them feel stupid about anything. So, and I have I'm going to upload that here sometime soon once I edit it. I have a call where a guy was super reluctant about going over the medications and said, hey, give me the first 3 to 4 letters and I'll find you the thing. Give me, and he's like, it's like, give me the chance on one of them. And then he pulled one up because he had it around, right, like the bottle around or whatever. He's like, whatever it was. I don't know what, it was AM, he's like AML, it's like amlodipine, he's like, oh yeah, that's right. So now he's like, oh man, the guy knows what he's doing.
Yeah.
Right, and then we made it a game, and he was super happy. Like he was like, "I'll give you 3. Does that work?" And I'm like, "Sure, let's do it." Right. So he got super hyped about it. If you make it easy for people, you usually keep them on track.
Yeah.
And,
now, one thing about that is make sure you don't now, because people are going to listen to this and they have the mentality of, let me find every single reason not to start working yet, right? So that doesn't mean sit down and learn all the medications and the health
No.
issues and things. It's things you pick up along the way, and that's where it helps to have a good upline, a good mentor, a good team behind you to be able to point you in the right direction, right? So for us, like, we have the Zoom room open, so everyone's dialing from there. We can, point people, oh, hey, this is this, whatever it may be. But yeah, I always like to note that, because people will find any reason to procrastinate the activity because they think they need to learn something first.
Yeah. So I learned that on calls, just
Yeah.
to make that clear, right? Like, I just try and realize there's a pattern, right? Somebody has this, they usually take amlodipine, losartan, lisinopril, metoprolol, or whatever. So then you realize, okay, there's certain commonalities, and you can bring those up. And then it's if you've done it the 10,000th time, you'll know the medications, and you can tell people that too. It's like, hey, I've done this over 1,000 times, like, and they're like, oh, okay, it's not the first time, so let's go, right?
Yeah.
Just lower the barrier for them. And anything you would change on that?
No, I mean, fact finding is pretty straightforward. It's crazy to me how many people skip the full process of fact finding, because it's like, if you're not getting everything, you have the ability to screw people over at such a high level, especially when people think they have something they don't, or you lied on an application, or you got the wrong information on there. Maybe not intentionally lied, but you didn't ask the right questions, so you didn't find out they had this, that, or whatever it is, and you didn't put it on the application, and then they go back and do, they have the 2-year contestability. So if they go back and they find out, oh, this person actually has this, or this person's weight is actually that, they can rescind that policy, and then you just put that person in a very vulnerable position at that point. So it's extremely, like, that is your job, to do the due diligence of making sure that you get the proper health, the proper medications, and no commission is worth putting someone in a bad spot. That's my mentality on it.
Yeah, most of all, that's just because you're trying to make a sale. There's a good chance that somebody else might be able to get them a policy, or they know they have a 2-year wait and their family can prepare properly. But don't put them in a spot where the family thinks they're taken care of. And final expense people are very irresponsible, right? So they're like, hey, I'm taken care of. I don't have to save anything ever again.
Yep.
So now there's $0 left, and then their kids or their spouse or whoever has to all of a sudden come with an amount of money that they won't make in the next 12 months, right? So just be mindful of that, and try not to be a dipshit.
Yeah, it's pretty hard in America nowadays, but
Yeah.
okay. So just going over the health side of thing, and I think this is the most important part, is like, well, yes, for sure the health is important, but then transitioning into obviously finances, right? So depending on what you're selling is how deep into finances you have to get, right? Final expense, you don't need to get super, super deep in there. You definitely want to have an idea of what they're earning, what they're making, what kind of bills they have, what kind of money's left over, things along those lines. When you're doing in more like mortgage protection, things like that, you obviously want to get more in depth with, like, on top of that, as far as like mortgages, things, and that's also where you find cross sells. But like when you're going through the fact finding process of the fact finder, which, let me note on this really quick, actually, is a lot of people, they start asking finances and then they go into health. It should be the other way around, just because the progression of it is because we sell financial products, right? At the end of the day, life insurance is a financial product. So what we want, where's the problem found? The problem's not found in the health. The problem's found in the finances, right? They're buying either money, time, or some sort of combination of the two. So we want to make sure we hit on finances right before we go into the deeper why, and getting deeper into, why they want it and things like that, because essentially what we're trying to do is find any gaps, right? I always would tell people, especially on the more bigger sales and things, like, my job's just to find the holes in the boat, so when you're going out to sea, you don't start leaking and treading water, right? I want to make sure that all the holes are known and we can plug those as much as possible so we can obviously go out there. So, I mean, when you're going into the finances prior to deeper why, like, what are you looking for? I mean, if you're doing, I guess we can keep this simple on the final expense side, and maybe in, a little bit more on the veteran side if you'd like, or however you want to pace that.
So with final expense, a lot of people make it much more complicated than it has to be.
Yeah.
And they make this big rah-rah about the finances and trying to get a their crazy way of how to get in there. The first thing that you want to find out, if you like, we're just talking final expense. You first want to find out, are they direct express? Do they have a bank account?
Yeah.
That's your biggest thing, right? Not just from a carrier availability perspective, but also if I'm already feeling iffy about somebody, and then they have a direct express card, I'm sorry, but I'm not going to write you. Right?
Yeah,
I don't need that charge.
It's typically not worth it. Yeah.
Yeah. And I mean, if I look, who has direct express and who's banking, who stayed on the book, the percentage would probably be abysmal on the direct express card side.
Yeah, I mean, on our tracking, so like inside our CRM, you fill out a sold form for every policy you have. You have an option to click direct express, banking, paper bill, whatever their payment process is. And we literally are able to go in, check the stats and say, oh, these fall off significantly more than anything else. So
yeah, do yourself a favor and just go with banking.
Yeah.
Like just do banking. Like your debit card really is a last resort, right? They expire, they get a new one, especially that type of people. They get hacked because they put their info everywhere. Just be careful, right? Now, on the financial side of things, like first off, hey, just to see what you can qualify for, I just ask, did you happen to get one of those direct express cards? The way I'm asking it is just, if they don't know what it is, then I'm just like, oh, it's just one of those cards the government sends out if you don't want to have a bank account, right? And then they're like, oh, no, I just got a bank account. It's like, okay, no worries, right? And then I can keep moving. If I ask, do you have a direct express card or a bank account, people sometimes, not all the time, but sometimes get a little standoffish. Like, why do you want my bank, bank
Yeah, it's very
information?
nonchalant how you do it. That's extremely important when talking about these personal subjects, medications, banking, finances, things like it's just like, hey, this is what I do.
Yeah, and essentially then, if you do a lot of cross sales, right, you'll go into what their health care situation looks like. Yeah. That will give you a little bit of an insight on their finances, because if they're on Medicaid, chances are their finances aren't super great. And then usually then I go on our fact finder, you have essentially the bank type here, and then right underneath you have the health part, right, the health insurance side. Mm-hmm. And then I'll be like, and average on a regular monthly basis, roughly what are we bringing in, right? And then you get whatever number. If you say it like you said, nonchalantly, there's no issue with it. No, if you make it a big deal, you're a little weird about it because you're not feeling comfortable about approaching that as a subject, then you'll get objections there. Like, why do you need to know that?
Yeah,
right? And
I always tell people the only awkward question is the one you ask awkwardly. So if you're being hesitant about the way you're asking for social, banking, anything like that, like that's why you're getting more pushbacks. It's less about the information you're requesting and more about how you're requesting said information. So,
for sure, especially you really, like Ted would say, you would get yourself in a pickle with. Ted's one of our guys. He's really funny. You would get yourself in a bad situation if they ask why you need their income. I can explain that. Chances are you getting caught off guard.
Yeah.
And be like, I don't know, just because I'm supposed to ask. It's like, well, there's financial qualifications, right? So just see, and then whatever the answer they give me is like, oh, that's perfect, qualifies you for a little bit more, whatever, right? So just reassure them whatever they're doing is good. Sometimes they're a little hesitant. It's like, have you rehearsed this before you give me all the right answers, right? So just make them feel good. Just, hey, make them feel warm and fuzzy, and have a good time. And then after that, we would go over mortgage. I will say, if they have a very low income, mortgage can be a little bit of a pitfall.
Yeah.
Because if they have a mortgage and now they're all of a sudden like, oh shit, I need to cover $100,000, and I'm 75 years old and I'm a smoker and have 15 different health conditions, if they can get that coverage, it's going to be outrageously expensive. I spoke to a lady the other day. It was $1,400 for her husband.
Hell yeah.
At that point, I more or less ended the conversation. I was like, hey, just to be realistic, that's what you're looking at. So mortgage, if you're in mortgage protection, get it. If you're in final expense, depending on the income, right? And with vets, I'd usually ask it unless they're like super low income.
Yeah.
And then any other debts. More debts are more for building urgency and building more of a pain point in case they don't have a lot of other stuff going on. If it's just like, oh, I want to cover my cremation, I just need 3,000. It's like, are there other debts? And like, oh shit, I got 10,000 on my car or whatever, right? So build a little bit more. Again, be careful not to overdo that. And with vets, just as a financial criteria, I ask for their VA disability rating for the percentage. You can look up online how much they get on a monthly basis, just so you kind of get an idea of where they're sitting financially. Because if they get 100%, they have a lot more disposable income usually.
Yeah. It also, just to note on that, not the vet thing, but a little bit prior, like when you're, especially on the final expense realm, like there's a fine line, right, where, you know, depending on if their income and their disposable, what they can and can't afford, because the idea is like you want to find that sweet spot, right? You don't want to make the problem so big that it just seems unattainable to solve, and it's not even worth it. And, you know, if you make this $250,000 problem and then go in and all they can afford is $10,000, I mean, they almost feel helpless at that point, right? So it's like knowing what you can do, knowing how you're going to solve, and figuring out where your in is. I see a lot of times either people don't find big enough problems or they find too big of problems and they push on these things. And then they shoot themselves in the foot, because now these people are thinking they're helpless. There's no way to fix the problem. Something is not better than nothing, right? It's just, it gets to that point. I see that a lot in mortgage protection. We used to, I mean, when we were running mortgage protection at a very, very high level, I mean, we would sell more equity protection than actual term mortgage protection. But the reason we would do that is because we would ask health first. And so once I started seeing, okay, this health issues are starting to knock them out from these term products, I start transitioning the conversation here into equity protection. And what are you going to do when you pass away? And how much time do you want to save, right? How much time do you want to keep in the house to make a decision? And obviously at that point you're buying time rather than taking money and paying off the mortgage, right? So just keeping it in that fine box where it's like, I want to know what they have financially so that I know what problems that I can make. Because if you make this big old spiel of how big this problem is and how hard it's going to be to fix it, and then you go in and all they can afford is $10,000, they're going to be like, no, screw this, I'm out, right? So just making sure you have that fine line in between of like not too big of a problem, but make sure there is somewhat of a problem, right? Would you agree with that?
Yeah, I would agree with that, especially because of the type of person you talk to, right? And not to like be demeaning or anything like that.
For sure.
Just realistically speaking, those are people that haven't, final expense again, right? That's our bread and butter for new guys. That's what we're talking about the most.
Yeah.
Final expense, those people, they're 60, 65, 70 or older, and they haven't saved a dime in their life. They usually don't have any money to their name.
Yeah, they're procrastinators. I mean,
they're procrastinators, and a lot of them are like, well, it's not worth it anyway. There's no way I could save up this much, right? And now you're coming in and you're building this huge problem. They came and said, I need something for the burial and leave 5,000 extra. Like, okay, let's look at 15, 20,000. And then you build a $50,000 problem knowing damn well that they can't afford that.
Yeah.
Right? So final expense is a lot more about downselling than upselling, really.
Yeah.
To the point that the client gets a benefit of it. Like there's plenty of people where I say, hey, it doesn't make sense for you.
For sure.
Like seriously, right? Or point them towards other
but
products.
That's important to note too, right? Because it's you're okay with walking away. I've always been the same way, right? It's like if I want this policy, if I want to sell this policy more than they want to have this policy, I'm screwed, right? So I've always been willing to get up and walk away if I don't think. My mentality is I want to put you in a better position. Does that mean that you get a policy? Sometimes. Sometimes it means, hey, you're actually in a really good position. Let's just solidify the fact that you're in a great position. That's a better position, in my opinion, right? Knowing that you're good to go.
And by the way, also, if somebody has, like, for example, their health isn't great and they have some type of graded guaranteed issue product, or for example, a veteran with a VA life policy, if you know what that is, or a mutual formal policy, if they're close to being out of that first 2-year period, don't try and replace that thing. Like, I had a gentleman the other day, super nice guy. We looked at a bunch of different options, And we went back and forth, got a couple of declines. We couldn't figure out what it was. And then one of the carriers gave me a little bit of info. I was like, okay, this is it. And he's like, I don't know I don't know. Like, he gave me all his medications, was a list, but none of these issues were on there, right? So anyway, I was like, well, we have these options. And he's like, well, I got this in place already. And I had it for, I think he said like 20 months or 22 months or something like that. So he was close to being out there 2 years.
Yeah.
So right on that cusp. And I'm like, yeah, you'd save $5 with this, but don't do it. Just keep what you have. Like, you're going to save $5, but then you're going to be in a contestability period and not knowing what's going on with your health. I wouldn't feel comfortable writing that for him because I want to put him in a better spot, just like you said.
Right.
Like, I'd rather just say no to that.
Yeah.
So not everybody will, but usually you'll build up some good karma.
Definitely. So, okay, so fact finder, getting into finances, and then this transitions great into the deeper why. I mean, when you're in the deeper why, there's a couple things you want to hit on, right, depending on who you're talking to. But let's just base it simple: final expense, veterans. Like, what are you trying to do in that process there mentally? Like, for me, it's like I have a blueprint of what I'm looking for. What are you going for? What is kind of your quote-unquote game plan?
So that's a great question. So first off, most of what we do is based on NEPQ, right? Jeremy Minor Sales Training, 7th level, both John and I in inner circle. Yeah. We do see limitations of how much you can get into a final expense sale because it's a much quicker pace. So keep that in mind. Yeah. But essentially what we're in that situation doing is we're bringing the last part. Financial fact finder is going to be the situation questions, if you know what that is, right? Yeah. And then we're shrinking most of the rest into one segment, right? So this is essentially everything but the pitch in one now.
Yeah. We call it deeper why, right?
Yeah.
We just that's what it is. It's taking partial situation, partial consequence, partial problem aware. Like, we just grab it all and put it together. Especially on the one call close scenarios. Obviously, in our pre-booked annuity appointments, we go through the whole process. That's a 2-3 sit process. Obviously, you're talking about people with million plus in assets, so it's a much different way to do it. But as far as the one call close goes, like, what are you looking for there?
Yeah, so one call close, fairly straightforward, honestly. So first off, I know what the situation is, so I know what the problem is, right? Yeah. Then, because we've been talking for a minute now, depending on the health, I'm going to start with, hey, while I'm pulling up a couple of options on them, it's like, okay, we're getting towards the end.
Yep.
What kind of had you look for any coverage in the first place, right? And then usually, if you did a decent job building rapport, they'll be like, oh, my friend just passed away, and the family had to pay for it, or whatever the situation may be, or I just don't want to have to pay, or I don't want to have my children pay for it, right, or spouse or whatever. So. And then I usually jump right into the identity frame because I think that's the strongest point.
Yeah.
Identity frame means I'm building their identity around their statements. So essentially saying, or what I want them to do, want them to buy. Essentially saying, hey, especially for guys, hey, that's we talk to a lot of people that they don't really think that way anymore. Like, have you always kind of been that like provider and protector type, or when did that come about? And then, because it's a long question and a lot of people have very short attention span, sometimes they don't catch it.
Yeah. So
repeat it just slower. If they catch it, usually they're going to, oh no, I was raised that way, or blah, 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 right? So it's like, oh, you just want to do the same thing your dad did for you, for your kids, right? So continuing the legacy. Something along those lines. For women, it's more like, have you always kind of been that, like nurturing type, or, how did that come about? It's very straightforward. It's very like, okay, just go through these. And usually they'll be like, oh yeah, I always want to take care of my kids. I always want to do this, right? And it's like, oh, it's interesting. We talk to a lot of people. They don't think that way anymore these days. Like, we speak to a lot of people, and they, they're more or less like, well, I've been paying for you all your life while you're little. Now it's your time to pay for me or my expenses.
Yeah.
And then they'll be like, oh no, I could never do this because, right? So you're getting the identity out of the way.
So real
And then you
quick,
say,
that's extremely important too, just so I can note on people that aren't more on the advanced side. The reason getting the identity frame is so important, right? And this is a huge point for most people, and they miss this a lot, is because identity creates action, right? So if I can tell you, if I can put you into, hey, this is what people do, like you're this type of person and this type of person takes this type of action. So that's why identity frames are so big, and it gets them to defend their position, which I'm sure Mo's about to go into here. But the idea about that is that you're trying to put them in a group, and this group does this. So that's why identity frames are, I mean, we could talk about it all day long, but like that's just a basic overview of why identity frames move people so much. That's why people, they say the fake it till you make it mentality. It's because you get this identity in your head, and then you start acting as if you're that person.
Yeah. So essentially, when some people say they can pay for me now, and then they're usually justifying why they're doing what they're doing,
Yeah.
and why they're not pushing the cost and the expenses off. So that's a good point. Then you're going, yeah, it just seems like you're the type of mother that knows how important it will be for your children's future not to be set back financially like that, right? And like, yeah, of course, right? Who doesn't want to be that person? And then either you can do that before, or you can do that after. Either way works. I like to put it in the question in, just so I understand that. If something were to happen to you and your kids had to come up with all the money, is it more so that they, it would hurt them financially, like put them in a bad spot? Or is it more so that you just don't want them to have to pay for it?
Yeah.
So you give them an either or, and both of them essentially tell you, well, I don't want this to happen. One says, well, it's a need.
Yeah.
And one says it's a want. And with that want,
yeah.
you're going to do that identity.
That's extremely important too, because it's like a lot of times we'll still see people sell it on the need when really it's a want. And you can sell on a want just as much as you can on a need. You just need to know how to do that, right? So that's an extremely important part, especially on the final expense, especially in any sales process in general, is it's understanding the difference between, do they need this, like they're screwed if they don't have it, or is it more of an ego thing of that's just not what I'm going to do, right?
The beautiful part is if they give you they say one or the other, some people will be like, I really don't give a shit.
Yeah.
They're not a buyer, right?
Yeah, for sure.
But if you're getting one or the other answer, the beautiful thing is that the identity frame still works, right?
Correct.
I say, well, have you always been that provider and protector type? I can say that either, hey, you can't afford it, like the children can't afford it, or I can say that, well, you don't want to, right? You don't want them to have to.
Yeah. So
either way it works. That's like, it just streamlines the whole process a lot. It pushes them towards that, I need to buy this. Then sometimes, depending on how I feel about their situation, I usually get to know if they've been looking for a while, or what the situation there is. So gauge that. Sometimes I'll be like, well, I mean, it looks like this is pretty important to you. I mean, how come you don't have anything in place yet? Or what have you been doing so far to find coverage, right? There's a couple of ways to do that, but essentially just get them to tell you, I couldn't afford any of it yet. That means you're going to downsell it because their finances didn't get any better. Or, then you can go, well, what did this show you? Are you ready to launch your life insurance career or finally break through, but the lead cost is holding you back?
We solve that. With us, you get free leads for your first 8 weeks to build your pipeline fast, plus full commissions, and you own your book of business from day one.
Look, we have noticed the biggest reason agents fail isn't because they suck. It's because they don't get enough reps in front of enough people fast enough due to not being able to afford the right amount of leads.
That's why we're footing the bill to get you the volume of leads you need to build a multi-six-figure income in this industry without stealing any of your comps.
If you're interested in applying, click the link below. Spots are limited. Don't wait.
Well, you'll also find out if they had something and they lost it. You can figure out why, right?
For sure. Yeah. Sometimes, I push in that identity frame a little bit more and be like, I'm kind of surprised you don't already have coverage in place. I mean, sounds like everything else is sitting pretty well. I know you care for your children, right? And then kind of leave it open. And then they're usually like, oh, this happened. I had a policy, but I had to borrow against it. Or,
Yep.
Whatever it is. And then from there, gauging on how much they know about the process, if they've been through it or not. If they've been through 5 or 10 of these, I'm not going to hold them there for too long. For new agents, go through the whole thing, because you're probably not going to gauge it right.
Correct.
So then I go through essentially how the process works, right? Or what we're going to look at, right? So essentially we're going to say, hey, some form of, and again, our script is, I guess give us a call or shoot us a text and we'll give you the script type thing. But
$5.
$5. No, don't worry about
kidding.
it. So essentially something along the lines of, hey, having something in place is better than nothing, right?
Yeah.
Yes. And then you are aware the rates, they depend on age and coverage amount as well as health. Duh, right? If they don't know it, you'll explain it. But essentially, the easiest way to explain it, an 18-year-old is going to have a better rate than an 80-year-old. That, literally everyone will understand that.
Yeah.
And then, because then you can brace them a little bit for the rates.
Well, also this is important because a lot of people go into conversation assuming someone knows something, and I've always been of the nature that I'm going to assume you know nothing, and start gauging where you're at, and then it's a win-win, right? So if they say, yeah, I already know, you can say, okay, well, as you know, right? And so it's just like, okay, cool, as you know, I'm still going to repeat what I'm going to say, right? Sure. Are you familiar with, how as your age increases, policy, blah, 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 and they say, yeah, I'm still going to say the same exact thing. Well, then as you know, an 18-year-old is going to have a better rate than an 80-year-old, right? So you can still say because most people don't want to feel dumb, and you'll catch this a lot. People will agree and say that they know what you're talking about when they have no freaking clue. So an easy way around that and not to shoot yourself in the foot is you're still going to say everything that you're going to say. You just start it with, well, yeah, as you know, and then just say whatever the hell you're going to say, right? So.
For sure. Plus, the better you get, the more simplified you can do that process, right? It's like, hey,
for sure.
I'll literally just ask, hey, what do you know about the different types of insurance, right? And then I kind of segue into that. Hey, the older you are, the less healthy you are. And then the easiest way because a lot of people look at term insurance when they're like 75, 80, 85, right? It's like, you're just not going to get it.
Yeah.
Right now, I build a rapport to the point where they're like, okay, whatever, right, cool. I don't have to explain that.
Earning the ability to be direct with people, right?
Correct.
That's the biggest thing, is that people need to learn that you have to earn the ability to talk about these things. And most of the time when you lose people in Fact Finder, you lose people in this part, you lose people in going from, oh, well, they wanted $500,000 in coverage and no one's changing their mind. No. You just didn't earn the ability to influence them, right? That's all sales is. It's influencing their mindset. And so if you don't earn that ability by building rapport, and I'm not talking about the Cowboys and the sports and the bullshit. I'm talking about them knowing that they can trust you and you care about their well-being. That's how you earn the ability to be direct with people. So.
Yeah, that's where tonality comes in, usually too, and active listening. But
active listening is a big thing.
That's a different topic for a different video, because that'll make its own full podcast.
Yeah.
But yeah, so going over, building that rapport, I should say, is huge in how direct it can be with people. Because usually when people trust you and you're direct, they will generally appreciate it.
And respect.
Yeah. Oh, for sure, right? Because a lot of, I hear it a lot. I was like, hey, nobody's ever told me this. It's like, it's like, I do. So, also that allows you to, when they're like, I usually ask them how much coverage they're looking for, which is a very dangerous question.
For sure.
But if you ask that and they're like, well, I'd like to have 500,000, it's like, I'd like to have that too, but realistically speaking, right? And then usually you bring them down. Or you'd be like, but realistically speaking, we'll be looking to just cover the burial, leave a little bit extra. And then
a lot of times what I would do when people would come out with these obnoxious numbers as a 75-year-old, they're like, oh, I want 500,000. I'm like, why not $1 million? Because then they're usually going to defend it with, oh, I can't afford that. Cool, they already know that. I just got to make
Yeah.
sure they understand they can't afford 500,000 either, you know?
Yeah, and you got to gauge how far it is out of their range, right? Like if
For
they're
sure.
like, if they're on like SSI, they make SSDI, they make like $890 a month or something like that. Don't offer them a $1,500 a month coverage. Like that's just being silly, right?
Yeah.
Anything more than $60 is because that's already a lot of money to them, right? But it's silly. Like you have one above that, obviously, and always show them the option they want to see, and be like, hey, but we're looking at an option or a budget option. He had this, but get to that in a minute. Yeah, I mean that's pretty much identity frame, kind of just building that urgency, explaining the process a little bit, and then just making sure, hey, having something in place is better than having nothing at all, right? You would agree with that? Yes. And then from there, you can pretty much go into the pitch, unless you have something else you would add in there.
No, I mean I could talk about deeper why all day, honestly, man.
Yeah.
That's my favorite part of, that's the good stuff. So most people get uncomfortable there, but I could talk. I mean, depending on the product and the solution that you're trying to get them. I mean, that's how deep in the deeper why you have to get. But really, yeah, I mean, identity frame and figuring out why they're looking, right? Why is it important now? And just, has something happened recently, right? And don't let them stay surface level because they will try, right? Like, especially in the final expense realm, they try to brush off anything that's important. Nothing against them. That's just who they are. But yeah, I mean, just trying to get out of staying surface level, peel back a couple layers of the onion, right? And really just get them to open up about why it's important now, why not keep pushing this off, right? And so one thing that I hit on a lot with a lot of people is just remember one phrase of there's nothing I can say that means more than you saying it yourself. So anything that I want to say to you, I'm going to find a way to ask it for you to tell me. And this works really, really well in the deeper why. Instead of making statements, I want to ask questions and get you to respond to it. Because the last thing, and we hear this a lot, is like the agent or the salesperson in general will speak more than the person trying to buy something. It's like, dude, how are you going to sell something to someone that you talk to more to? Let them talk, let them open up, and always remember, there's nothing that I can say that's more important than what you can say if I'm trying to get you something. So that really comes out a lot in the deeper why. So I mean, and then other than that, it's in all of this gathering. I mean, I don't want to go super in depth on the pitch, obviously, but all this leads into the pitch, right? Because if at this point you don't know what options to pick or you don't know why you're picking those options, that is a problem.
Yeah, if you don't know why you're giving them those, like what problem specifically they solve, that is, you didn't listen or you didn't ask deep enough, right? One of the two is going to be the case. Yeah, I mean,
and
you
your
could go
close
around and say
ratio
that,
is probably shit at that point, right? Because
sure.
nobody buys a death benefit; they buy a solution to a problem, right? Is that time? Is that money? Is it what is it? What is it that I'm buying with this option? They don't spend $200 a month for $15,000. They spend $200 a month for a burial plus 6 months of mortgage payments or whatever it is, right? So it's like, make sure on the pitch side of things, I'm getting ahead of myself, but I get very into it. Make sure, because we have people and they'll be dialing and they'll be talking to you and they'll get to the pitch and they're like, what do I pitch them? It's like, do you not listen? Like, what do you mean? What do you mean? Solve a problem. That's what you're pitching them. You're pitching a solution. So, yeah.
Yeah, I mean, really, the pitch is fairly straightforward, right? I mean, I just do a summary of everything we talked about, and I'm not cutting that short. I'm going over the health.
Yeah.
I'm going over their financial situation.
Yep.
If they make a description on, I want to do this for my 2 daughters or whatever they say, whatever is important to them, I will repeat that because I've written down all the information.
And that lets them
health.
know you're listening.
Correct. And then if you end that statement with, did I forget anything? And they're like, you hit the nail on the head type thing. Perfect. Now you can present numbers.
Yep.
Go over numbers. Get 3 options. That's your easiest way in there.
I'm a
3 options
closer.
Yeah. I mean, you can do that. 3 options works, right? So do your highest version.
Yep.
That's what their ideal situation, right? Unless that's like way out of budget.
Yeah.
That is most likely the option they're not going to pick because it's too expensive. And it should be a little too expensive so the others look better. So let's say, I don't know, let's say they wanted to cover cremation and leave a little bit extra. They need about they say they want 6 months of what's it called? Mortgage.
Yeah.
So cremation is about $5,000. Then we're saying 6 months of mortgage. Let's say it's $1,500 a month, so they need about $9,000. So let's say they need about $15,000, right? And then let's say you start out, but they say they would like to leave a little bit more, but they don't have to. They would like to. So you start with $30,000, and on the $30,000, you're like, hey, that's gonna be a Rolls Royce. Wife's gonna be taken care of. She's gonna have X amount left over, about $15,000. So, either she'll take that and pay more expenses down, whatever the situation is, of course, or she can do a really nice 3 months cruise, make it a little funny, then tell the option coverage amount, what it does, price.
Yep.
Then you go to the next one. Ideally, if you have, let's say you have 30,000 and 15,000, so you know the top and the bottom, you want to set that the one in the middle a little bit closer to the bottom one, so that gap between the highest one, that if you think they're not going to take that, you want to make that gap look a little bit larger. So let's say it's 30,000, 20,000, and 15. Mm-hmm. So that gap from the 30 to the 20, say we're going from 180 to 120, and then from 120 we're going to like $90.
Yeah.
Right? It looks a lot nicer. Obviously explain coverage amount, what it does, price, coverage amount, price, what it does, price, coverage amount, what it does, price.
Yeah.
And then important, that's where a lot of people fuck up.
Correct.
Don't give them the time to think about this right then and there. Once you give that last price, and just to see what we're looking for, whatever the intro in that would be, I just go like, John, as a father, out of those three options, which one do you feel like would be best for your wife, kids, whoever?
Yes.
Don't give them time to think about it. Don't say think is the best.
Yep.
Say feel is the best, because we're making, choices with our emotions.
Yep.
We're buying with our emotions. And then they'll usually choose an option, or if they're not sure, chances are they can't afford any of them. So now we're going to downselling. It's like, hey, can't afford any of them. Well, if we take a look, and you're shaking your head already, so we're going to get a different opinion in a second. But what I would do...
I was just...
Oh, gotcha. What I would do in that situation is I would probably go down to 10 if they can't afford the 15. Be like, hey, this takes care of everything, but it sounded like your primary objective, the main concern is doing this. And let's say that's the cremation, and then we might not get 6 months, but we might get 3 months of the mortgage.
Yeah.
And that fits in the budget. Then they're usually okay with it. 99.9% of objections in final expense are going to be price, because that's just the demographic.
Yeah, I mean, dude, realistically, all objections come down to price. It's just
sure.
what's their justification of it, right? Talk to spouse, think about it, whatever it is. Because the idea is if it was free, they'd take it, right? So if that's the case, then it's always price. We just have to figure out why it's price. So a couple things on the pitch, I think, and we push this quite a bit, is 3-option close. I'm very big about highest to lowest unless they're 80 plus. For 80 plus, I usually go lowest to highest. I don't know why. I've just always done it that way. Usually because it's significantly more expensive. But I always go highest to lowest 99% of the time. And then the blueprint of the pitch is to make sure, and once again, if someone's telling you to do differently, then obviously follow your upline. They're there to help you make money, right? But for us, we're very big about benefit amount, what it does for you, and then price. benefit amount, what it does for you price, right? So you need to make sure that because they buy on the what it does for you, not the benefit amount. The benefit of the amount should just be something, but the what it does for you should be the bulk of that part, right? Because that's what they're buying. So nobody, like I said earlier, nobody buys $15,000 in coverage. They buy what $15,000 does for them. So make sure you paint that picture exactly what that's going to do for them. So that's going to give you 6 months peace of mind, whatever it may be, right? And then going into the pitch, and then making sure, as Mo said, you want to add another one as a whoever they are to their beneficiary. Which one do you feel, right? And then go into that way, and that's really the pitch, and then into the close. I don't want to get too deep in the close because we'll do an objection video, but I mean realistically, especially on final expense, man, I don't think you should push the sell too much, you know. But usually you'll get, I got to think about it, I got to, you know, then, and we'll go over all that stuff at a later date. But, and then at that point, it's really just a transition into the application, which is super simple, however you guys do it. I mean, I guess we're kind of on the cusp here, but any final, or do you have anything else on that part before we just kind of do a quick recap?
Yeah, one thing that I hear a lot of new agents do this, and that I know some people in agencies push this, some just don't say anything about it. The whole, hey, this is just to see if you get approved.
Yep.
Is a very dangerous game.
Hell yeah, it is.
Because now you go through all that nonsense just to then find out that they don't actually want to buy it. Because these people, a lot of times they have a lot of time on their hands. They entertain, they like you at this point if you did your job right.
Yeah.
So they don't mind staying on the phone with you another 20 minutes.
Yeah. Well, that's why a lot of people say final expense persistency sucks. It's like, no, you just suck. Because you're pushing for an approval, you're not pushing for a solution. Because our persistency for final expense is extremely high compared to but that's because we don't do direct express, we don't do guaranteed issue, we eliminate all the BS of the final expense industry, and we're super strict. And you can do that when you have the volume of presentations and you have the skill to do so. But yeah, final expense, their persistency is not horrible if you do everything properly and you don't sell on approval. Like, don't sell on a 30-day free look period in the sense of like, oh, you can just cancel this in 30 days if you want. Like, why would you go through that work? That just shows that you don't respect your time.
Yeah, rescission close, no matter what sales job I was in, rescission close was not the way to go. Because you're just causing yourself a bunch of headache, right, for no reason. You're better off using that 20 minutes and, going to the next presentation.
Well, and plus, then you're just going to get a banking objection majority of the time. And I always say when banking gets the objection, you didn't sell them in the first place, because banking's when it gets real, right? Social Security, that's fine. As long as you know what I mean, they'll give you social because they know that's what they have to do to run the MIB. But once you start getting caught up at banking, that just means you didn't do your job right, because it gets real at banking. Oh, now they can take my money for it? No, screw this, I'm out, right? Yeah. And that's what happens when you do that rescission close and you start pushing the 30-day free look period for a cancellation. But yeah, I would say that's the most one of the biggest things about closing and things like that is like you didn't close them at that point, because realistically life insurance, it's like you don't know if you actually closed them or not until a year later. It's like you can get a charge back whenever. So cool. I mean, I think that pretty much breaks down the process in a very simple overview. I mean, hopefully that helped people. Couple highlights from my side, and then we'll close it out on your side is, just remember identity creates action. One thing, especially on the final expense realm, and I missed to talk about this in the intro, but really you always want to be able to sell the out, because then they don't feel pressured or cornered. And what I mean by sell the out is it's like how Mo said, oh, and while I pull these options up, that's selling the out. It's like, okay, we're almost done, right? And so they feel more comfortable, rather than you being like, oh, now tell me about your deepest, darkest whys, right? So same thing on the intro, booking appointments, things like that. It's always sell the out, so it's just like nonchalant, no big deal. Like, we're going to be on and off the phone quickly. I think that's extremely important on final expense and a lot of other one-call closes. When you're talking personal finances, things like that, as nonchalantly as you can be. Not unprofessional, but nonchalant, like this is what I do every single day. It is what it is. Making sure you're different, and then, highlighting on nothing that I can say is more important than what can come out of your mouth. And the biggest thing for me, guys, is like, dude, just run. Like, you should be, if you're brand new in this industry, you should be on a race towards your first 100 presentations. After you give out 100 numbers, meaning you present to 100 people, you should have a pretty damn good idea of what you're doing. You should have a solid understanding of the health, a solid understanding of medications, a solid understanding of the process. And if you don't at that point, either you took way too long to get there, or you just don't fucking train in the meantime. So that's kind of my tidbits for the end of this. Mo, do you have anything about the sales process, and then we'll get wrapped up?
The only other thing that I would say is we've gotten so far off that, hey, just see if you get approved.
Yeah.
That actually before going with the application, we say, hey, first of all, we call it request for coverage, right? Applications has a negative connotation with a lot of people. So before we get into the request for coverage here, the carrier is going to need 3 pieces of information from you. Number 1 is going to be a little bit of info on you: name, date of birth, driver's license number. Most of that I already have. Number 2 is going to be a little bit of information on the beneficiary, so who the money is going to go to. And then lastly, and this is worded exactly like that for a reason, I know most people want to get these started right away. Unfortunately, you cannot pay anything yet because we don't know whether you're approved. However, there will need a form of payment on file, which is typically just routing an account number. That thing gets 90% of your banking objections out of the way, because at that point in time, you ask it in a very non-aggressive way of, hey, you're not paying anything yet. We do have to see if you get approved, but I want you to know if we get you approved, at some point you'll have to pay.
Yeah.
And that's what you're using your bank for.
Well, and one thing you did really well with that is letting them. I know most people want this to start today, so now you don't have to have the awkwardness of them being like, "Oh, I can't afford it today," right? It's giving them, once again, not making them feel dumb, awkward, anything like that. But it's also, I'm a big proponent of getting the objections out of the way as quickly as possible, because to me, my time is valuable. I don't want to beg you for this policy. I want to work with the people that want the policy. So for me, it's like, if I can get that objection there rather than at the end of the application, I'm all about it, because I can go on to the next person. Because as I always say, I'm not here to help everybody. I'm just here to help as many people as I can. And if I'm going to get caught up in an objection at the end of an app, I'd rather get a objection before that, so I can spend that 20 minutes with somebody else helping them out. So that's an extremely important transition into the app. I agree.
Yeah, I think that. I mean, there's more to the process for sure, but that's as much as I would cover in a video, because this is like an hour already. So
yeah, we're pushing TikTok brain hours, man. Yeah. Most people can't stand more than. We need to put one of those like the Subway Surfer videos at the bottom. Cool. So appreciate it, guys. Yeah, appreciate it, guys. Hope this helps. Obviously, if you found value in it, like, follow, subscribe, all that stuff that we do. You can catch us on Instagram, TikTok, and then share.
It'll all be linked in the description. By the way.
Yeah, it'll all be linked in the description. And then, drop us a follow. We'll be here next week talking about something else. Also, if you want to learn how to make $250,000 plus a year selling insurance with us, we're actually bringing on new agents where you'll actually be trained specifically by myself and Mo, hands-on in the Zoom room, one-on-one training. So there will be a link below, quick video. We actually just opened up a program where we noticed the biggest barrier to entry for insurance agents is consistent lead flow. And so what we're doing is we're giving you full comp from day one, but we're also giving you up to 8 weeks leads on us. So we're making sure that you have the volume to make the presentations and get those numbers out there, because the biggest thing that we noticed is that people don't get enough reps. And a lot of times it's not because they suck, but it's because they can't afford to get to that level yet. So we're taking that burden off of you. If you want to apply for that position, we have tons of top carriers. The link will be in there below. Anything else you got on that, Mo?
Nope, I think that'll be it.
Cool. Appreciate it, guys. See you guys next week.